Hey, Alexa, play Tyrone Jackson's Trading Stocks Made Easy podcast.
Okay.
It's time for the Trading Stocks Made Easy podcast. Each week, Trading Stocks Made Easy demystifies stock trading and investing so you can profit big. And now, here's the host of Trading Stocks Made Easy, the wealthy investor, Tyrone Jackson.
Hey, it's Tyrone Jackson, and welcome back to another episode of Trading Stocks Made Easy, the podcast, soon to be followed by Trading Stocks Made Easy, the motion picture. You saw that coming, didn't you? Hey, I'm so happy that you're here to spend a little time with me, and today's show is something we're calling All About Earnings. Thank you for that round of applause. I appreciate that. Round of applause. Okay, here we go. Let's get started. You know, when I talk to you about the stock market, I'm always giving you gems and clues as to what makes a stock price go higher. Now, many of you who download the show every single week are as addicted to the stock market as I am. So I thought I'd take an opportunity in this particular episode to talk just a little bit about earnings. You hear me always saying your wealth is in your thinking, and when you have a financial education, you are empowered. So today, we're going to focus on the primary ingredient that makes a stock rise, and that is called earnings. Earnings makes stocks rise. So a lot of people are obsessed with choosing winning stocks based on news. But if you look at it statistically, the news around a company can be totally separate from the earnings or the revenue in a company. So one of the approaches that I learned after 20 years of trading and investing, I always want to follow top-line revenue and then earnings. Top line revenue, how much money is that company actually bringing in on a quarterly basis and or an annual basis? So if we're trading an index like the S&P 500, then we want to follow those companies that are in that index. We want to follow their earnings on a quarterly basis. Why? These are companies that are still growing their revenue. If we're trading members of the Dow Jones Industrial Average, we're looking primarily at their annual revenue. Why? The 30 stocks that comprise the Dow Jones Industrial Average, well, if we oversimplify, we would do it this way. Their top-line revenue is solidified. Why? Companies that are really good at earning billions and billions of dollars per year have a hard time unlearning that behavior. You see, part of what makes someone successful in life is when they learn a system that creates successful results. All they have to do is amplify that system. Well, it's sort of kind of the same if you're a publicly traded company. When you start earning billions and billions, whatever got you there, whether it's partnerships, your television and radio ad campaign, your digital campaign, or reselling products in an adjacent niche, whatever it may be, your job is to duplicate that success over and over and over again. So a lot of habits that I introduce you to when it comes to having a successful life financially, corporations are duplicating their success over and over and over again. Now, I'm going to give you some specific stocks to think about, and I'll explain to you why those companies are successful. Because the two companies that I'm going to kind of highlight today are very good at earning billions and billions and billions of dollars, and they just won't stop doing that. Now, just as a side note, some companies earn billions and billions of dollars during a particular era. So let's say companies that did really well from 1980 to the year 2000, when they were seeing earnings and revenue growth, it was tied to that era. When that era is over, that company's ability to earn billions of dollars dissolves. Part of the skill of investing is investing in stocks that are very popular during a particular era, and when that era ends, we sell off those stocks and we move on to other stocks. Okay? So I remember growing up, my father used to say, if I had purchased AT&T shares 30 years ago, I'd be a millionaire, he used to say. And he'd always say it with that same cadence. I'd be a millionaire, right? Well, think about AT&T today. Is it the same company that it was 55, 60 years ago? Back then, it was the telephone company. Remember when there was only one or two telephone companies? Today, it's all about digital services. So AT&T has plenty of competition from T-Mobile, Verizon, and other companies that pop up on the scene that aren't publicly traded. So that means you and I are always looking to invest in stocks that are making their money from an era with the understanding that those companies might not be hot 12 years from now. All right. So let's take a case study here. One of the stocks that I really love that's part of the S&P 500 is a company called Starbucks. Their ticker symbol is SBUX. If you examine the top line revenue of Starbucks in 2017, the company earned over $22 billion. In 2018, the company earned over $24 billion. By 2019, the company was earning annually $26 billion. Now, here's the secret sauce. It's really that top-line revenue growth that drives the stock price higher. Could we have a cultural shift where Starbucks and its stores could disappear in the next 4 to 5 years? The answer is yes. Why? Because the popular trend of drinking your morning coffee from Starbucks could change. And when that trend shifts and this company is no longer earning $26 billion annually, as I like to say in the Wealthy Investor Program, it's time to sell the stock, which we call dates. So you think about it in your dating life. What would happen for those of you who are single? What would happen if you started dating someone whose annual income was going down? Are you going to have a wonderful future with that person and they're earning less and less and less each year and you're both getting older and older and older? There's a technical term for what's going to happen to your life when you start dating people whose income is declining. And this is a Wall Street term, and you might even want to write this down. The term is your life is going to suck. Did you get that? You want to write that down, right? Because the last thing you want to do when you're getting older is pick a partner whose income is going down. You just don't want your life to suck, to put it in layman's terms. Now imagine if you're divorced or if you're single and you're dating again. Wouldn't your chances of happiness and harmony with your partner radically increase if your newfound love of your life had an income that was constantly rising? What if their income was doubling and tripling? Would that make for a great life? Of course, you guys could travel the world, buy a home together, have financial freedom, and wonderful vacations, assuming that person is not really like a cheapo, right? Okay, well, in the stock market, one of the reasons why the Wealthy Investor Program is so successful and it helps people just like you is because I'm constantly showing you where the money is. I'm constantly showing you the stock prices where the revenue is rising, and then you make the choice as to whether or not you want to own that company. So, what's the underlining theme going on here today? Success is a series of positive habits. When you get good at choosing companies that are building their revenue streams exponentially because of the era that they're in, that's when you stand a chance of becoming a stock market millionaire. Back in a moment.
Want to increase your stock market trading profits? Then you need to start your monthly membership to WITradeschool.com right now. Don't understand how to write covered calls for monthly income? No problem. Simply review Tyrone's latest stock trades in our video library as many times as you need. WITradeschool.com is all about helping you get the financial education you need to earn money in the stock market and change your financial life. Tyrone Jackson, the wealthy investor, has helped his students earn thousands of dollars per month trading stocks online from home. These are people just like you. So what are you waiting for? Follow Tyrone Jackson's red-hot stock trades and investment strategies today. Don't wait. Start your monthly membership at WITradeschool.com right now.
Now, in this episode, we're talking earnings, right? We don't want to go on bad dates. We want to go on good dates, both in life and in the stock market. So our job is, again, to choose companies who are making billions and billions of dollars in the era that we're living in now. And when that era is over, we sell the stock, we make a great profit, and we move on to the next company. So a lot of people think of investing in the stock market when you're choosing individual stocks as a kind of set it and forget it affair. Well, nothing could be further from the truth. We must pay attention to the earnings and the top-line revenue in the stocks that we're actually holding, because 10 years from now, that company's heyday could be over. Let's take a look at another company, Amazon.com. Have you ever heard of them? Well, we all know that Amazon.com, although not a member of the Dow Jones Industrial Average, most certainly a member of the S&P 500. Now, Amazon, from a revenue and earnings point of view, is really interesting. If we talk about the numbers specifically behind the stock price, here's what we know. In 2017, the company earned a staggering $177 billion. 1 year later, when the company began to focus not on selling books, but being essentially the Walmart of the internet, at the end of 2018, the company earned $232 billion. Now, you don't have to be a mathematician to be successful in the stock market, but I will toss this idea out to you. Is $232 billion higher than $177 billion? Think about it. 3, 2, 1. The answer, of course, is yes. So what do we want to do? We want to choose companies whose top-line revenue is constantly growing. That's what makes them a good date. But wait a minute. In 2019, the company earned $280 billion. Are those revenues rising? Yes. And finally, in 2020, the company brought in even more money, $386 billion. So let's tie that to the stock price, because in the financial world, every trader and every investor wants to only date winning companies. Well, it's this increase in top-line revenue that drove Amazon stock from 5 years ago at $722 to where it is right now to over $3,000 per share. So what did I just teach you in this episode? It pays to date winners. In your life, are you surrounded by people who are winners financially, intellectually, and emotionally? Or are you surrounded by people who are negative, who do nothing but complain, complain, complain? As I tell you all the time on this show, those negative people are affecting your joy, your happiness, your money, and your wealth. They're killing your dreams. Their energy brings you down, down, down. Hey, I've mentioned this on the show before, and a lot of you seem to respond to these ideas of being around people who are positive, who are open-minded, who see the future, and maybe even support your dreams. Those people uplift you. You're happy to be around them. It feels good in their presence, and time seems to go really quickly. That's how you know you're with the right crowd. In the stock market, you want to stay with those companies that have that top-line revenue growth. Now, just because you choose companies that have top-line revenue growth doesn't mean that your shares in those companies are going to double by next Tuesday. That's not how investing works. But in a 2 to 5 year period, if you continue choosing winners, I can promise you, you'll be in a better place financially and your portfolio will grow. Hey gang, here's what I want you to remember today. Success always leaves clues. Stay with people who are positive, open-minded, and your life will always change in a very positive way. Choose stocks where top-line revenue keeps growing, and that is how you get richer when in today's market, in this era. Hey, this is Tyrone Jackson, the Wealthy Investor, saying stay open, keep an open mind, stay positive. The best experiences in your life are just around the corner. I'll see you next time right here on Trading Stocks Made Easy.
You've been listening to the Trading Stocks Made Easy podcast. Be sure to rate and review our show on iTunes. While you're on iTunes, be sure to click the subscribe button and you'll automatically receive our next episode.